Do not FOMO into the phone tokens just yet. There is going to be a time for that, of course, but I'm talking about the phantoms, the ones, the atoms, and the near protocols of the world, with today's focus generally being on, of course, Atom, one of the major market leaders. With that said, welcome back to EllioTrades channel. I'm your host, Krown, again today, and a big focus on the Atom token, or Cosmos, if you want to call it that. This one's had a phenomenal run, and while I do believe it will be very likely continue on to major new all-time highs in the next couple months to come, it is time to be having a bit of restraint here as we wait for the market to give an ever so slight ebb and flow, allowing for some better entries. Also, I should let you know before we get into the bulk of this content here that I have my own channel where we do a daily analysis on Bitcoin. If you think that that might be valuable towards your life, as Bitcoin typically does judge the general direction of this market, well, you can find that in the link in the description below. Okay, cool. So you'll actually notice a bit of a different interface here to start off this video. This is actually the new rendition of my web app, actually. You can find it for free at app.crowntrading.net. The reason why I'm bringing it up right now isn't to subtly show myself, although that certainly does help, but more importantly, and perhaps more relevant to you, we have the most free market data available on the web in real-time fashion. And the reason why I'm bringing this up right now is because I want to be focusing on some of this particular to this day's analysis. The global open interest chart, as you can see right here, is once again nearing some pretty high and critical levels, and we've been following up on this for the last few days here as it slowly trudges upwards and onwards. Open interest, of course, is relevant, very likely to you, because it represents the amount of leveraged positions open and available on the board. And as you'll likely notice, anytime that we have seen this open interest get particularly above about 12 billion, with a B that is, we have seen, well, usually, in fact, for all of the iterations for this past year, have been resulted in downside moves. Now, that doesn't mean it's always going to be downside moves, of course, but for the history that we do have right here in a general upside market, you would expect that to unravel into some, pretty nasty washouts, if you will. Now, what I want to do here is talk about this move that we're currently experiencing in Bitcoin and why I believe that we still have a little bit further south to go. You'll notice if I go down to an hourly feed on this data, representing much more pertinent information, you'll see that we are actually even still rather high right now, and very likely do initiate a bit of a cascade as Bitcoin does the dance of death at our $46,000 level. With that in mind, I am looking for this next reset of the open interest chart, or just open interest in general, represented on a chart, is what I should be saying, to lead into the next major opportunities, especially for these tokens or these assets that have been showing a lot of strength. One of them being, as I said earlier, Atom, Cosmos, symbol ATOM. Okay, so I just wanted to get that out of the way right there. Should also kind of go over funny rates. They are rather low, and just for what it's worth, which I suspect you might be interested in as well, you can also check out the leverage ratio over here. Well, spoiler alert on that one, it's never been higher actually. And if we go down to the hourly feed, it's actually going up, which is concerning, you might say. All right, well, let's jump into it for right now, and I want to focus on symbol ATOM, Cosmos, as this has been a phenomenal actor. We've covered this several times on my own channel in the live streams, as people are usually interested in it, and it's popped up all the way back up, essentially to its prior all-time highs. Now, with Bitcoin in a bit of a precarious place and could very easily take a slight tumble lower, we might say, I would be looking for this next tumble lower to likely lead into the next opportunity for that higher low, that ever highly esteemed higher low that I would be looking for if I was looking to get into a position on ATOM. So just as a general knowledge, whenever you do test your prior highs after being away from it for a while, in this case, this would certainly suffice, you typically pull back just by the very nature of retesting that region. Why is that? Well, you probably had a lot of people over here who were buying that region, and they're just holding on for dear life during this whole correction and just wanting to get out at break even. That's a little bit of the theory behind it. Of course, there's a lot more to it. More importantly with this, we do see from our indicator perspective, daily volatility is getting up into the 90 percentiles. And we start to look for runs to take a bit of a breather, aka consolidate and contract in this case with a little bit of downside price action once you do get to extremes like this. For example, the last time that we saw something relatively this extreme was actually in September 18th, which was very close. In fact, it is your closing all-time high for right now. Of course, things did wick up over again a few more times around that region, but ultimately, price action did essentially come back down over time. Same thing over here. We can do the same thing to the downside on these exhaustion moves. Of course, volatility is direction neutral after all. And we also do see daily RSI is showing a bit of a pullback, which is again to be expected. This is a strong read. This is a very strong read right here, but it's to be expected your first trudge into the bullish control zone that you do get pushed back. So that is kind of setting the tone for today alongside Bitcoin, suggesting that we might see maybe one more washout, might be painless, might not be painless, or I guess that depends on your disposition, of course. But where would I be looking for on this pullback? Where are the generic targets essentially? Well, I thought that this went over very well the other day where we went over both aggressive and conservative targets, and we can definitely do that again today as well. So what I'm going to do now is make this as simple as possible. We're going to put on our drawing tools. You'll notice that we had several levels that were relevant on the way up, on the breakout, and they will very likely be relevant on the way down. Now, if you are very aggressive, which I don't actually think that this is going to work out, to be honest with you, but if you were the more aggressive type, meaning that you are more comfortable with holding risk for potentially a longer time, and also more comfortable with getting in and out of your positions faster, well, you're likely looking at the area between $35.50 to $37 on this pullback for a potential higher low before continuation onto our next targets that we'll talk about upon validation above your $44 breakout level. With that said, I do think that would be a bit of a stretch. Personally speaking, I'm certainly more on the conservative side when it comes to trading, and I would be actually angling my own cannons down a little bit further south, somewhere right around this about 32.5 to 33.5 zone right here. The reason why is because if this trade does fail, because everything does have a non-zero probability in order to just completely get wrecked, of course, also has a non-zero probability to go to the moon as well, of course. Anyways, my point is that in order to manage risk on a trade like this, you're a lot closer to what would negate the long-term bullishness of this asset on the higher time frame specifically. And again, we're probably talking about the next few weeks of price action as we do kind of look for this to play out. So in this case right here, more aggressive people very likely looking, again, between about, let's call it $35.50 to about $37, with risk management below about $35 on a daily closure. And for the more conservative people, they're very likely looking somewhere down around $32.50 to $33.50. So let's talk about some pros and cons of this. Not that this is financial advice, but to just talk about general theory here, in the sense that when you are more aggressive, you do give yourself a chance to get into moves that, might not go lower in this case, thus not giving you an entry. At the cost of, if you are wrong, you will either be holding a drawdown or, you'll very likely take a short-term loss and then reposition yourself a little bit later, assuming that you are still interested in that asset. This asset is no longer in breakout mode looking for new highs over a long period of time. When you do start to see daily closures below the breakout point of this prior accumulation and reversal area, which is below 32.5 specifically. So now I want to quickly talk about long-term continuation targets, and then we'll bring this one home. So let's see where we're at in the grand scheme of things. The weekly, powerful as all hell, just a nice uptrend. Yes, this thing moves absolutely crazily, but hey, that's why we love our altcoins, right? And then a monthly did incredibly well to close out the year as well. So both of these do suggest to me that we very likely see new all-time highs within these next couple months of price action. And where would those relevant targets be, and what would validation look like in order to make those targets relevant? Well, we'd want to see a daily closure, nothing less, above $44.50. If you do want to use a lower time frame, let's say a 4 hour in this case, we would pull it back on over here, and I'd actually want to see the same level as well. So that perhaps could work. I'm just a lot more comfortable with higher term timeframes for what it's worth, but hey, all good. And where would the targets be after that? The next targeted region before the next general pullback and daily consolidation would be somewhere between about $49 and $51.50, somewhere in this little pocket right here. That would be relevant for the next major continuation move. Now, I do not believe you'd actually see the major high put in there. Coming out of a base like this on a long-term uptrend, it's more likely that you actually will see big moves up, in this case, somewhere around the $60 region more long-term. Now we're talking months down the road, if it even happens at all. And your confirmation first would be $44 for the move into the, let's just call it $50 region. And then your confirmation for the next move up to about the $60 region would be a daily closure above 51.5. Okay. So while we're here, I do want to just quickly address the higher time frames, namely the weekly. We're seeing something very incredible right here, and I just want to take a second to really highlight it because this is something that you may find useful for your own trading behavior. But in my sort of trend trading strategies, what I like to do is I like to employ this strategy that I actually went over in a video on this channel. It must have been like 2 months ago now. I call it the Krown cross, basically, where I want to see the 9 exponential moving average, which is represented by the cyan one right here, trading above the 21, trading above the 55. I look for corrections down to my 55 alongside relatively low volatility, which we have right here, which we had right here, and then right here again. And by the way, those were all major lows, might I add. And in this case, we also do see weekly hidden bullish divergence. That is a setup. And for example, the last time that we saw this particular setup with low volatility coming off of that higher low on the 55 with hidden bullish divergence, that was precipitating your last run to your current all-time highs, almost a 300% run right there. The time before that was coming out of this base, of course, and another very impressive run over the next 3 months. It looks like this one a 400% run. We had another example over here as well, and this one did produce about a 300% move right there. So on average, not that I'm saying that it has to be exactly this, but probably looking at a theoretically speaking, 200 to 300% move. I do like to be more conservative with those estimates, but in this case, let's just add that onto our current lows. What would a 200% move look like? That actually puts you in the low $60. Very interesting. Let's take the upper estimate of that as well, just to see. And $300 puts Atom in the low 80s actually. So perhaps that could be relevant more, further along the timeline here. In fact, I'm curious if we see anything around that region. In fact, we do. We actually do see the 3-spot 272 extension right there. So again, I just want to reiterate my stance on this asset. Long term, very, very good. Short term, very likely does pull back. More aggressive pullback targets are going to be looking between about 35.5 to 37. More conservative pullback targets looking around $33, give or take, let's say a half a buck from that number. Okay, I think that's a great place to leave off this video. I don't want to waste any more of your time or talk your ear off. But with that said, I hope this one serves you well. I'll see you in the next one. Take care.